Good morning. Welcome to Trading Hour. I am Reema Tendulkar with Mia Sonia Shenoy and Pavitra Parekh. It's looking like a good start, right? To this brand new, the first week of 2023. So once again, here's wishing all our viewers a very happy new year. Currently, the benchmark indices are up close to about 0.5%. We had a flat start, but in the first 30 minutes itself, things picked up on our markets. Mid-caps are moving in step. The mid-cap index up 0.6%. The advanced decline ratio is healthy. Nearly 3 stocks in the green for 1 in the red. And across the board, you are seeing participation. So the metals sector is leading the charge today, a gain of 1.6%. It's followed by strength in the PSU banking index. That's been the rank outperformer. And on the first day of 2023, the PSU banking index has started its innings with a gain of clearly about 1%. The Nifty bank is also higher in trade. That's up close to about 330 points. Today, of course, across regions, many of the markets are shut on account of New Year. So today could be a lighter day in terms of volumes. But as the week progresses, we are going to see a lot more triggers. The jobs data on Friday for the United States, the minutes of the December FOMC policy will be out on Wednesday. And next week, officially, the earnings season will kickstart with TCS on Monday. And then you'll have Infi, HCL Tech, Wipro, all of them reporting their numbers next week. So things are going to be picking up a lot in terms on the earnings front, news flow, and I guess activity as well, right, for us?
We have our work cut out, definitely, right? I mean, it's the start of like full-fledged news flow hitting us. And I think the bulls have had it good. I mean, it's good to see green on the screen at the start of a new year, although it is just another Monday, right? I mean, there's nothing really that's changed except the calendar year, perhaps. And you have TCS that come out with earnings next Monday, so we're going to start talking about that very soon. Auto sales have been quite strong, actually, more pros than cons, more pluses than minuses in the auto sales this time. So all eyes will be on that. But we have an action-packed 1 hour to go.
Oh, absolutely. You know how they say December is the Friday of the year, so January is the Monday of the year. So I definitely, I mean, it is going to pick up from here. I think the quiet period is over. Today, in terms of, the sector action, it's all in the metals pack today. There's, by the way, a big Jefferies note that has come out on the metal sector where they've turned optimistic on this space. So all of those stocks are really buzzing around. A lot of the banking names also doing well. Some of the smaller banks will be up for you. On the downside, you're seeing tech and pharma. Some of the mid-cap tech companies actually looking worse than the larger names. So take a look at something like an LTI Mindtree. You have Emphasis, Birlasoft, these ones seeing some cuts. In terms of cues, we also, in addition to all of the domestic cues that we'll be speaking about, we also have those cues from the global markets that will start coming through midweek onwards. So do keep your eye out on that. By the way, important flashes at the bottom of your screen. This is on the demonetization case, which was in the Supreme Court. So that is being heard right now. And it is a 5-judge bench. So we're waiting for more. For now, the one judgment that we do have is that there are no flaws in the decision-making process. They're rejecting the petitions. So that is being upheld. But we will keep bringing you more on this as we do get it. And our colleague Ashmit will also be joining us for more on that. First up, as before we kickstart the show, let me take you through everything that we have lined up for you today. The market trades firm in the green in the opening session of the new year, even as prominent global markets remain shut. Metals and industrials lead on gains, while IT and healthcare drag. We'll discuss the way forward for the market with Vikas Khemani of Carnelian Capital.
Okay, Religare is in focus as lenders approve a one-time settlement plan of 2,300 crore rupees for Religare Finvest. We have Rashmi Saluja, who's the executive chairperson of the company, that will be joining us to discuss more on this.
And it was a mixed bag for the auto sector in December of 2022. We will get you the highlights and also discuss the numbers and the outlook with Aniket Mahatre of HDFC Securities. So all of this and lots more is coming up for you over the next 60 minutes.
But first up, let's invite the first corporate on Trading Hour today. Religare Enterprises is in focus after lenders approve a one-time settlement plan of 2,300 crore rupees for the company's NBFC arm, Religare Finvest, against 5,300 crore rupees it owed to the consortium of lenders. So we are looking at a haircut of 57%. To discuss this and more, we're now joined by Rashmi Saluja, the executive chairperson of Religare Enterprises, on the show now. Rashmi, morning. Thanks for joining in. This is Reema here, and Happy New Year. It's a good start to 2023 for the Religare Group. First, if you could start off by telling us, how do you plan to fund this? 2,300 crore is what you need to pay to the lenders. You have a period of 90 days. Take us through your plans.
Thank you so much. A very happy new year to you and your entire team. And of course, we started the year for Religare absolutely bang on. It has been a long awaited time. In fact, it took us 4 years to reach where we reached day before yesterday. We have already paid almost from 80 to 85% dues have already been paid. In fact, we signed the entire agreement with the lenders. 16 lenders we signed on 30th and 31st. Before the end of the day, we paid the lenders almost 85%. So that we have already done. And the remaining also, though we get time, 90 days as per the RBI guidelines, we get 90 days to fulfill the entire settlement. But we are going to complete it in January so that we can really focus on the lending part. As far as the monies are concerned, the entire team was working very hard, and we very tirelessly worked on the collections, and the efficiency of the collection was really good. In fact, the entire COVID period was very well covered. So we had a major amount of monies in our banks already, and the remaining, whatever the gap was, has been paid by the parent company, that is REL. So there was absolutely no issues on the payment. And in fact, the lenders only got comfort while knowing that, yes, we have the monies to do the settlement.
Okay. Looks like you are all set to, take the lending business forward in a big way. You're looking to restart it as well. Tell us a little bit about that. How do you plan to do it? What are the kind of resources that you will need? And what do the next 1 to 2 years look like for the lending business?
In fact, in our country, in fact, the financial sector is really very bullish, and we are very, very hopeful that NBFCs are going to do extremely well. And the only thing is the entire focus of the government and of the RBI and the regulators is on governance. If we are able to secure the governance part of it, then doing business in this country is absolutely a great idea. And NBFCs are here to stay, and they are going to be more niche specific, more sectorial, and that is how it is going to be moving forward. We are also going to be focusing on our area of SME. We are very happy on doing that because the entire team has been trained, and we have also acquired a lot of skills in it. And that's going to be a way forward. That is just the NBFC part of it. We've had some preferential round earlier. Twice we've raised money, and now post OTS, all the shareholders are extremely happy and they would like to pitch in more money. So that is again an agenda of actually raising money for starting more businesses and also to strengthen the existing business. As I had earlier also mentioned, that we really want to make it a 360-degree financial services as far as NBFC and the allied services are concerned. But our major focus will also continue being in our health insurance company, and also the broking and housing development, which is basically for the affordable housing. So one, of course, we have monies. We've just funded our health insurance company. We've just given 300 crores last a month and a half back, and we will continue funding that. And by February, March, we will be raising around 700, 800 crores, for which our shareholders are very keen on doing.
All right, that is good to hear. I'm just going to take a minute to refer to the flashes coming through from the demonetization judgment. This is important. The first one from Justice Gawai said that power available to the center can be, used and is available for all series of bank notes. Windows provided for exchange of notes were reasonable. So he is saying that he's completely rejecting what the petition said. There's no flaws in the decision-making process, and it satisfies the test of proportionality. We also have the view coming in from Justice Nagaratna, who says that the Justice Gawai judgment does not consider that only the RBI board can recommend demonetization. So this is what we have so far from the demonetization judgment. This is sort of unraveling in real time. So I'm going to keep bringing you updates on that front. But these are the two views that we do have so far. Rashmi, coming back to you, good morning and thank you for joining us once again. You were talking about this one-time settlement. Can you tell us what the balance sheet could look like after that? If you could just give us a sense of what the net worth would be, what the debt is going to look like.
Sure. First of all, let me tell you one thing. After the one-time settlement, it is going to be a debt-free company as far as the NBFC is concerned. And of course, remaining all the other companies are debt-free as well. But I also wanted to bring notice on something which we started, that it's not a 57% haircut to the banks. And first of all, we have honored our commitment, not waited for 3 months, which is a good idea for the banks. And we have already paid around 80 to 85% already to the banks, and the entire money we are also planning to pay in next 15-20 days. So when you are actually paying the money upfront, it is a big source and bonus, and for banks as well. And if you calculate the entire haircut, it is not more than 20-25%. That's it. And of course, when it adds on to giving the money upfront, so that also is a very big bonus. That's one thing. And second is that post the OTS, when we are finishing the OTS, the entire prudential norms as per the RBI, we will be much more healthier and much above all that. So we can start the business. Our CRAR will be again over and above 50%. So that's going to be good. And our balance sheet immediately after will be plus 500 crores. So that looks like really, really a healthy start. And it also gives confidence to other lenders who would be in a position to lend us monies for actually taking it up. And the first money that we will put in for starting the business will come from home. And that is exactly where REL is going to be supporting our NBFC, apart from any other businesses. We have done this until now, and we will continue doing that because we are very, very hopeful and we are very bullish on the future of NBFC.
Okay, we'll get to that, Rashmi, but here is the crux of today's Supreme Court judgment on the 2016 demonetization to demonetize the 500 and 1,000 rupee notes. The Supreme Court has upheld the government's demonetization decision of 2016. That is the key takeaway. The Supreme Court has upheld the government's demonetization decision. This was a very important judgment that the street was awaiting. It's the first of 2023. There were two judges who were going to rule on it, and the ruling is that they've upheld the government's demonetization decision. And moments from now, we'll get to our colleague Ashmit, who's at the court, and he will be getting us the nuance of and what the arguments presented were. But Rashmi, very quickly to talk about the NBFC lending business. What's the quantum of lending that you are looking at in 2023? How much do you think you will be able to lend? And what is the cost of borrowing for you? And therefore, what could the margins look like?
So the cost of borrowing will, of course, before that, let me tell you one thing. We are going to focus on SME and also on lot into health and health infrastructure. Health is again going to be one of important focus for our SME business or in NBFC as well, because that is one business we have understood is going to be doing extremely well. As I was telling you, niche businesses will work. So that is going to be adding the big bouquet for NBFC. Second is, of course, it is going to take a while before we really get a good rate of interest from the lenders. Until then, we will be focusing on in-house funding the company. Almost 1,000 crore is what we are going to be putting in for our Religare Invest. That's the kind that we are looking at. And of course, it's going to take a while before I can actually decide that what are the margins that we're looking at. Right now, we're just trying to stabilize the business, and we are trying to still understand which are going to be in SME, what are going to be the areas of focus and business, while we will also be focusing on the affordable housing segment, which is as little as 10 lakh to 20 lakh. And the SME ticket size is going to be a little more granular than what we did earlier. It's not going to be more than 5 crores to 10 crores. So we will be actually creating something more on a granular book rather than actually doing what we did earlier in a large ticket size.
Thanks a lot for joining in, and have a great 2023. That is Religare. By the way, the market has been quite stable today, up almost about 81 odd points. The Bank Nifty is doing much better, 320 points gain on the Bank Nifty, so it's a good start to trade. Let us slip into a quick break. All right, before that, Ashmit is joining in now on more details on the Supreme Court judgment in the demonetization case. Ashmit, over to you.
Well, the big takeaway from the Apex Court has been is that the 2016 exercise that we all recognize as the demonetization exercise has been given the thumbs up by the Apex Court. It was a split verdict. 4:1 is the split of the judges. There were 5 judges that gathered today. There were 2 judgments that were pronounced. Justice Gawai's judgment is in fact in majority, and that judgment has clearly held that this exercise of power by the centre, acting on the aid and advice of the to be specific, is in consonance with the law, that this is a proportionate exercise that was taken by the centre as a part of an economic policy decision. The court also held that as far as economic policy decisions are concerned, it is not for the court to in fact intervene or to in fact question the centre on the merits of those economic policy decisions, that's the so-called Lakshman Rekha, and that the court will respect that. And that finally, the Supreme Court held that even the window that was created by the government for exchange of these currency notes, that is again something something that was reasonable, that was proportionate, and that the centre's exercise of power was well within the four corners of the law and the legal provisions the way they have been provided. Essentially, the long and short of that is the demonetization exercise. 58 petitions challenging that have been struck down. The apex court has been unequivocal in its position that the demonetization exercise was in conformity with the law of the land. There was nothing untoward about it, and that there has no case been made out by the petitioners to challenge that or to perhaps unscramble the egg, so to speak, as far as demonetization is concerned. So a thumbs up here for the government, a big victory here for the government. The petitioners, of course, their petitions have now been set aside by the top court.
All right, Ashmit, thanks a lot for getting us the latest. This is the demonetization judgment, and we now do know that, it has been upheld. The government's decision to demonetize in 2016 the 500 and 1,000 rupee notes has been upheld by the Supreme Court. With that, we're going to get into a short break now. On the other side, we're going to talk all about the world of commodities. Manisha Gupta will join us with an update. Hey guys, welcome back. You're still tuned into Trading Hour on CNBC-TV18, and let's talk about the world of commodities now. Manisha joins us for an update, and today she's going to take us through the metal prices. Manisha.
Pavitra, thank you so much for that. Well, we have seen metal prices gain multi-year highs, all-time highs in the previous year, and then a big amount of correction as well. But as we step into 2023, there still are concerns about recession, COVID flare-ups that we're looking at, and the Russian sanctions as well. The positive here is that China is saying that they will manage COVID as a Class B infectious disease instead of the Class A, which they've been doing until now. So that will pull back a lot of restrictions from there. Also favorable domestic Chinese policies, whether it has been about the liquidity injection or cutting reserve ratio, ensuring that there is more playing field coming in for the realty companies. All of that clearly has been supportive. And then you have winter stockpiling also happening in Asia and various parts of Europe. That would need demand for metal prices continues to be on the higher side. Markets also anticipating that the EV and renewables demand in the second half of 2023 is going to be one of the reasons that you will see support continue in case of metal prices. And then it is about multi-year low inventories that will continue to support the markets here. Take a look at the fact that LME has entered into 2023 with the lower warehouse stocks in metals in last 25 years. If you look at aluminum inventories, they have declined by 72%. Zinc inventories have declined by 90%. Lead inventories are trading at a 15-year lows right now. And you have copper inventories just about for 5 days of global consumption. Nickel, the shortage that you have on LME for the deliverable metal has been making it difficult and is the reason the metal has been playing in the premium there. When you look at the overall metal picture for 2022, we've seen nickel prices as an outperformer up by 45%, and this has been the best gain since 2010. In other metals, you have iron ore as the only sole gainer. It's trading at a 6-month highs, and we've turned positive onto this one, 1.5% on the higher side. Copper saw 13% of a decline, and this has been a first annual drop since 2018 coming in for copper. In other metals, you also have tin, which fell by 36%, biggest annual decline since 1990 coming in for that metal as well. When you talk about the outlook then, and we have a report from Citi suggesting that they are looking at bearish views on nickel and zinc for the next 6 to 12 months. Most markets do believe that there is going to be some positive outlook continuing in case of iron ore and aluminum because of the power rationing that we are seeing in China and Europe as well. Citi, for one while, has been bearish on this. It also has been bullish, though, in case of gold and silver there. But this is about copper, where the best of the outlook really comes in from Bank of America. A record high of $12,000 is a possibility, and Goldman Sachs is quite bullish on that. Everybody else thinks that the copper prices will trade anywhere between $65,000 to $8,000 per ton on the higher side there. Put out on what we have done in sense of from the highs for many of these metal prices in 2022. So, well, as I said, it's only been nickel and iron ore which have traded in positive in this year, but they also have come off highs quite sharply. That is various other commodities which have seen a sharp decline, whether it's zinc, iron ore or steel, down anywhere between 25 to 45% from their highs. And that is the reason the market believes that in 2023, even if not this quarter, the next couple of quarters will see rebound come back into this space.
All right, thanks a lot for that. Well, it was a mixed bag for the auto sector in December. So when we come back from the break, we'll get you highlights and also discuss the numbers and the outlook with Aniket Mhatre of HDFC Securities. Do stay tuned in. On CNBC TV18. Well, let's just get you a quick summary on what's happening in the auto space. Now, for the month of December, the auto sales have been pretty much a mixed bag. What stood out on the downside is Maruti's numbers, which were quite weak this time around. Total sales were down about 9%. Domestic sales were down 10%. But remember, these are wholesale numbers. The management has indicated that retail was very good, and wholesale generally dips in the month of December because the inventory levels are on the lower side. Moving on, Eicher Motors, Royal Enfield sales were quite weak this time. It's a 7% fall that we've seen. But the one standout performance this month is in the commercial vehicle sector. So you had very strong CV sales for Eicher Motors, 17% higher. Tata Motors MHCV demand has picked up in a big way. It's a 34% growth that we've seen over there, led by a strong recovery in, improving fleet utilizations, a pickup in road construction, increase in cement consumption as well. All this is the commentary that has come in from Tata Motors. Even the passenger vehicle numbers for Tata Motors have hit their highest ever monthly and quarterly run rate, coming in at 40,400 units, largely led by the good response for electric vehicles. Tractor as a segment has also done very well. Both Escorts as well as M&M have reported strong numbers in the tractor space. Escorts tractor sales up by almost 19% year on year. The company is saying that the rural sentiment continues to remain favourable on account of a good Kharif procurement, Rabi sowing and better water level in the reservoirs. Moving on, Ashok Leyland's numbers were also very strong. So total sales growth of 45%, MHCV sales up by 61%, and it's the bus segment that has done very well post resuming of offices and schools. And finally, as I said, M&M's tractor numbers were good, but the auto numbers were also quite strong. Auto sales went up by 45% year on year, and the SUV sales growth saw about a 60% growth. Let's see, what the way forward looks like. We have Aniket Mhatre who's joining in. He tracks this space very closely. Aniket, hi, good morning. Always great speaking with you. We were speaking earlier as to how the commercial vehicle demand has come back in a big way. And companies like Ashok Leyland, the stock prices have gone from like 80 rupees now at 150 plus. You think it's factored in a lot of the good news, or do you think there's more to go on the upside for the CV makers?
Hi, good morning, Sonia. Thank you for having me on your show and wishing you and your team a very happy new year. Coming to your question on CVs, yes, December has been very strong. Ashok Leyland has reported a good growth. Even VCV has reported good growth. Look at Tata Motors, total CV numbers are flattish, but MHCVs see a very strong double-digit growth. However, one thing we have to notice, December, just 1 month's comparison may not give you the true picture. If you look at Q3 numbers for these top 3 players and add them, it's cumulating to about 8% YOY growth, which tells you that the growth rate is sort of tapering off for commercial vehicles related to a very strong first half. Q3 has been a lot lower, and I think Q4 will also be softer given a very high base of last year, which is possibly the worry why quite a few CV players like Ashok Leyland is sort of seeing a range-bound movement for the last 6 months now, where market is sort of anticipating that incrementally growth rates will normalize in commercial vehicles. And the other headwind for the commercial vehicle sector is discounts suggest that to keep rising, and they're just not coming down. So it continues to be a record high discount season for CVs even in Q3, as we understand, which will continue to hit their margins incrementally. Our key call here has been that margins will not come back to the previous peak, for the simple reason that price hikes have been so much in this sector that it will be difficult for OEMs to pass on everything to the end consumer. And hence, given the expectations that are built in currently in this space, we would refrain from investing here.
Okay. So what are the target prices for these stocks? I mean, Ashok Leyland, Tata Motors, Eicher Motors. Based on the commercial vehicle growth, do you see more earnings and target price upside?
No, as I said, I mean, for Ashok Leyland, we actually have a set rating. Even for Tata Motors, we have a reduced rating. Tata Motors is no longer only a domestic CV play, as you would be aware. Largely, Tata Motors fortunes are dependent upon JLR, which actually contributes to close to over 75% of its revenues. And JLR is facing multiple headwinds given the geopolitical crisis at the moment, and would continue to do so for foreseeable future. Which is why we sort of have a reduced rating on Tata Motors. On Eicher Motors, again, it's not a CV play, it's largely a Royal Enfield play, and here we have an add rating, actually more got to do with our positive bias on the two-wheeler business momentum than on VCV. Although VCV is also doing reasonably well related to other peers, but we are more positive on the motorcycle piece than the CV piece and VCV.
Aniket, morning. The worry is the two-wheeler demand. The two-wheeler demand or the industry is still down in double digits compared to the December 2017 peak. We were chatting with Bajaj Auto's management earlier today, and they kind of indicated that, things are on the mend, particularly on the export side. They said that, it was a free fall from April to July. After that, things have been plateauing out, and they believe it's perhaps bottomed out or in the process of bottoming out. Your thoughts on two-wheelers, both from an export point of view and even the rural market? Should we anticipate a pickup in the rural market sales, say, in the coming month of January?
Sure. Thanks for bringing that out. So two-wheelers has remained a laggard across all categories. If you see PVs and commercial vehicles, both have done very well. In fact, PVs will actually surpass their previous peak this year itself. But two-wheelers continue to remain a laggard from a domestic demand perspective. And rural demand has not yet picked up, as you rightly pointed out. But if you look at some of the rural indicators at the moment, the Kharif crop output has been pretty positive. Rabi sowing has been so far good at the moment, and sentiment remains positive, as also pointed out by the tractor sales that are coming out in the last couple of months, which sort of lends us to believe that over a very low base of last few years, rural demand should pick up incrementally, which should support players like Hero MotoCorp, which is the reason for a buy rating on this name pattern.
Okay, that is
on exports, as you finishing off the argument on exports, as you rightly pointed out, Bajaj management pointed out that export headwinds continue, and I think it will sort of continue for at least a couple of quarters, if not more. Then the base will sort of set in, and if demand sort of picks up, then we can look at some of the export names like Bajaj Auto. But at the moment, export momentum seems to continue to languish expectations.
Okay, got that. Aniket, very quickly, if you could just take us through sort of your top picks in this sector, where do you expect the outperformance to come from?
Sure. So our top picks at the moment are TVS Motors, Maruti Suzuki, M&M amongst the OEM space, and within ancillaries we like Bharat Forge. Why TVS Motors is simply for the fact that it continues to outperform across categories. If you look at scooters, they have gained market share even in this fiscal. Their newly launched Raider in the motorcycle 125cc space continues to gain share. And even in exports, although there are headwinds, they have not underperformed or rather declined as much as a Bajaj Auto. From a margins perspective also, I think the incremental positive benefit for TVS will be much better than other two-wheeler players. And finally, on the EV space, I think amongst the listed names, as also related to Honda or HMSI, TVS continues to do much better than peers, right? With a 8,000 kind of a monthly run rate and targeting a 20,000 monthly run rate by March end. I think TVS seems to be going all guns blazing. On Maruti, clearly they are focusing on the UV space right now. We should see them display the two new SUVs in the Auto Expo, the Baleno Cross and the Jimny. And I think by next year, we are expecting a new MPV from their stable, which should be extremely encouraging incrementally. And that should help Maruti recover back lost share in the utility vehicle space. In the passenger car space, they continue to do exceedingly well. One other factor to sort of monitor in Maruti is the transition in the BS6 phase 2 transition, which will happen in April 2023, which would mean that diesel variants will be much more expensive than the petrol variants. That might shift the demand towards petrol variants, and hence Maruti could be amongst the major beneficiaries of that trend as well. Hence Maruti sort of also remains a topic for us. And finally, M&M, as you rightly pointed out, right, tractor demand continues to be heavy. They are gaining, recovering back lost share in utility vehicles, and even pickups category. Look at that; they are seeing a very strong growth even in pickups. So all their categories seem to be doing extremely well, and the stock has recently sort of seen some correction. So I think one should look at buying the stock with the correction.
All right. Thanks a lot, Aniket. Always a pleasure speaking with you. And those are disclosures coming in from HDFC Securities on your screen. Let's take a quick break on that note. When we come back, we'll discuss how the year could shape up on the technical front. Rahul Mohinder of ViraTechIndia.com will be with us. He'll also give us some top trading bets for the day. Stay tuned.
Back holding steady for our markets, up 0.5% on the benchmark indices. It's time now to get you a few technical trading ideas. Rahul Mohinder of ViraTechIndia.com is now with us. Rahul, what would your recommendations on individual stocks be for today?
Let's start with the index. My own sense is that the market's probably going to be sideways. The important levels are around 18,350 on the upside, and from a larger perspective, 17,950 on the downside. Unless we really get past these levels, I don't think we'll have some kind of a meaningful big move coming on the markets. But in the main, I think the markets are going to mark some time within this range. And within stocks, there's a lot of action happening. Let's start with two buy calls first. The first one is Titan, which I think is a stock which can clearly go past the 2,700 mark. One could get into the stock at current levels. I see 2560 as very solid support. So keep a stop loss at say about 2550, go long for that 2,700 target. Hindalco is another stock which I'd recommend on the buy side. I did recommend Tata Steel last week on one of your shows. That's done very well. And I think Hindalco is joining that party. We are moving to about 515 on the stock. Mind you, these are not intraday recommendations. I think it will take a couple of sessions, but it's a fairly solid bet for a short-term trader. Hindalco with a 470 stop loss, a 515 target can be bought. Two stocks which clearly look negative and soft to me are Asian Paints as well as Bajaj Auto. So if you're looking for a sell within this range-bound market, I think these are good sell stocks, particularly if Bajaj Auto starts breaching today's low of 35.20, which is actually some kind of a minor support. We should slip all the way down to about 33.80. 3600 is strong resistance on Bajaj Auto. So one could look at going short on the stock with that stop loss. And Asian Paints, as I was mentioning, I think 2950 is a realistic target you could trade in for. 3120 could be a stop loss when you go short on the stock.
Okay. Any thoughts on Canara Bank just before we let you go? I mean, that one's had a dream run. It's up 70% in the last 1 year, and it's touched a fresh 52-week high now. You see more upsides here?
Canara Bank, of course, has outperformed, but the question is risk-reward ratio. And such a point that comes in 344, 350, that's the region which, the stock could probably touch, and that's strong resistance. But, taking a slightly longer term stance, yes, I'm still positive on the stock. There's no reason why I should say that you should lighten up unless you're very concerned of the near term. So in the main, yes, the stock continues to be a buy. If you have that 6 to 8 month horizon, 390 is a reasonable target you could be trading in for. It's just that the risk reward equation is what you need to measure.
All right, Rahul, thank you very much for joining us and taking us through, the technicals, how the technicals are looking, some of these fresh trading ideas as well as we get into a fresh trading year. But with that, it's time for a short break on the show. On the other side, we'll shift focus and we'll talk about the market fundamentals. Vikas Khemani, founder at Carnelian Capital Advisors, will join us. Back, you're still tuned into Trading Hour. For the market, we're currently seeing around an 80-point gain on the Nifty, so it's around 0.4% higher there. That so it's picked up significantly from where we started, and we had also reached almost the 18,200 level. So let's see how that moves from here. But for now, let's get a conversation going. Vikas Khemani, founder at Carnelian Capital Advisors, joins us now. Vikas, good morning and a very, very happy New Year to you. This is Pavitra. We have been talking about how India outperformed last year, but considering the kind of global setup that we are in right now, we have recession fears, we have the entire China opening. How do you expect next year to be, and do you think that the market could be sideways for a while?
Hi, Pavitra. Good morning and happy New Year to you and your entire team and your viewers. I think coming to markets, 22 was one of the best year for India from a global market perspective, but a flat year from an absolute return perspective, right? Very, very marginal return, right? And I think last year, we had said that it's going to be more likely the year of de-rating after a great performance in 21 and a modest earning growth. And I think if you see, probably the de-rating part is over. But this in 22 perspective, you will still see a moderate earning growth coming through because India is one of the best, fastest growing economy, and that will reflect into the corporate earnings. But it will be sort of a bit selective. There will be mix and match in terms of earning growth. So here, 2023, according to me, will be we are cautiously optimistic. From a market return perspective, you will have sectors which will do well. You will have sectors which will not do well. You will have lots of positive news, or you will also a mix of the negative news. So you'll have tailwinds and headwinds, and all of them are going to be substantial. So from a tailwind perspective, if you see, I think fastest growing economy, corporate earnings growth, especially in some large sectors like banking and all continues, IT sector continues to do well. So that those are there, right? The fund flow situation, according to me, should be very favorable for emerging market in general and in India in particular. But from a headwinds perspective, I think we have major elections lined up in this year, which will be seen as a semi-final of 2024, and they might have a bit of volatility, or they might have a bit of impact depending on how it plans out. So that uncertainty will remain. The impact of actual increase in the interest rates to some extent on demand will start playing out in this year. So you will see that impact on some segments coming about in the markets. So if I were to say this year is going to be reasonably again a year of sort of sector rotation, and a bit of a cautious has to be there. You will see plenty of up and down movements. While the trajectory would be up, but you will see fairly good amount of volatility throughout this year, and the volatility will remain, and that one has to be very careful when you are investing in this kind of market.
So, Vikas, good morning and Happy New Year to you. Hope this is your best one yet. I mean, you've had a couple of really good years. Hope you continue that, consistent performance. What are you looking at as a major trend for this year? I mean, the one big trend that a lot of people missed out on last year was PSUs, and particularly PSU banks. What do you see as the big trend of 2023?
Hi, Sonia. Thank you very much and wish you a great year. So I think, like I said, that one big theme will be, in my opinion, volatility. This year will be reasonably volatile year. And, you'll have to pick your sort of, stocks. I think, underdogs, which were ignored by the markets, and the earning tailwinds come, those are the kind of, stocks will do well. I think you will have to, to look again, I think banking will continue to do well. Because earning growth is there. IT will, according to, despite all the concerns, will continue to do well because there is a reasonably good amount of growth. None of the companies guiding sort of slowdown in the demand. That will continue to do well. Within that, of course, you have to pick your stocks. That's fine. One dark horse or surprising could be, we might have, the API and pharma stocks have, in some sense, or chemical stocks have sort of not done well in this year, while the long-term story remains sort of true, because the stock clearance and drop in the China price, and after a great year in 21, 22 did not do at all well for them, and they saw a lot of correction, but the long-term structure story is there. So according to me, that could be one sort of potential, we are still doing our work, but that could be potential space where you could see, it's a small space, but that could be a space where you could see reasonably good risk-adjusted return. So, you will find pockets, like in every market, this year also there will be pockets of interesting opportunity space, and that could be one from a little contrast standpoint of view.
A lot of people are betting on these infrastructure capital goods names ahead of the budget, and they believe that this budget, which will be the one ahead of the union elections next year, is going to be heavy on capex spend, which will augur well for the financials of these companies. Is this a trade which is yet to play out, or has it been played out? Because a lot of people off late have been talking about it. Is there alpha left in this whole infrastructure's, capital goods, stroke capital goods companies?
So I think both are two different segments, so to say. One is the private capex or industrial capex, and second is infrastructure capex. Both have to be played through different players, right? Infrastructure capex story has been in a while, playing out and being doing, but the specific things have started probably getting pushed in the railway space, and there I think a little bit of aggressive capex has started happening, and some of the beneficiaries are there for us to see that. I think that theme will continue to play, and probably budget could be a little bit more accelerating that theme. Private capex space has been sort of seeing momentum for last year and a half specifically, and I think that will continue to remain so over the next 3-4 years. Of course, that's where you've seen the most amount of returns as well as the re-rating happening. So one has to be cautious about the valuation and the growth potential. Currently, I see a little bit of over optimism and enthusiasm has got built into the capital goods stocks, which are leveraging the capex cycle. So one has to really see a bit of a sort of more caution. There will be moments of opportunity when those stocks will correct, and they correct. That time one is a good level to get into, because the theme is structure, but one should be really cautious from a valuation standpoint.
All All right, Vikas, we would love to chat some more, but unfortunately we're completely out of time. So hopefully we'll pick up on this conversation in a few days' time. But thank you very much for joining us and taking us through your call on the market. We have to get into a short break now, but there's lots more market action coming up for you in just a bit.